Hello and welcome back to the Proactive Investors New York studio. I'm Christine Corrado. With me in studio today is Tate Sullivan from Maxim Group. Tate, it's great to have you.
Thank you.
Tate, you cover the industrial space at Maxim and have been covering Capstone Turbine, who's due to release earnings after the closing bell today. For those investors new to the story, can you just give us a brief description of Capstone?
Yeah, Capstone sells and rents microturbines that for the most part use natural gas but can also use other types of fuel. So sells and rents to different end markets, to large commercial buildings in New York City. For instance, One Vanderbilt and the new Hudson Yards development, they sold microturbines to. And they also sell to oil and gas customers, among other end markets. And they recently started and expanded their rental program, renting natural gas turbines to oil and gas customers. So most of it is microturbines. I look at it mostly from natural gas, but they also do create electricity from other types of fuel as well.
And we'll talk more about them in a second, but why did you decide to initiate coverage on the company?
Yeah, I started covering Capstone in the last month based on some analyst changes at our firm, and Capstone fit into my industrial space. I cover some other names tied to natural gas. In the U.S. specifically, both distributing natural gas and renting equipment that uses natural gas, different than Capstone's microturbines, but Capstone fit very well into my coverage, and I was excited to start covering it.
So since you began covering the company, how have you been measuring Capstone's growth thus far?
Yeah, this will be my first quarter when the company reports after the close today, and specifically when I released my preview yesterday and ahead of that, was looking at Capstone's sequential EBITDA improvement. So that is going to be my key focus when the company reports after the close. In the previous 2 quarters, on a sequential basis, on average, they increased EBITDA by about 23%. So I recently increased my EBITDA estimate for the most recent quarter to continue that sequential growth. So the first metric I will look at when the numbers come out is I expect an EBITDA loss of a negative 2.1 million. I believe the Bloomberg consensus is negative 2.3, and that's about a 5 to 6% sequential increase from the prior quarter.
What do you think is the main driver of that growth?
Yeah, so Capstone, as they've previously talked about, expanded their rental program. I'm looking at other companies that rent different types of equipment tied to natural gas, such as natural gas compressors. The rental business model can achieve meaningfully higher gross profit margins, excluding D&A. So in my forecast for the most recently completed quarter, I factor in a slight increase in Capstone's product revenue based on renting more of this equipment. So after looking at EBITDA, I will look at the gross product margin to see if it is capturing some higher margins from their rental program.
How are they able to increase those gross margin from the rentals versus direct sales?
Yeah, direct sales, 1 quarter, sell the turbine to a customer with all the associated costs embedded in that sale. On the rental program, out the door, spread out the revenue over the life of the contract, and with less, and then also with the associated costs on that turbine spread out. So that is one reason that the margins can be higher, as well as depending what the daily rental rate is as well.
And in terms of cleaning up the balance sheet, you anticipate Capstone to narrow its loss from $2.7 million to $2.1 million. How exactly did you come to that conclusion?
Yeah, looked at the sequential improvement from the previous 2 quarters, and by increasing my margin forecast slightly from the previous quarter as well. Service margins, Capstone generates, I believe it's 60 to 80% of their quarterly gross profit margin from service-related work, maintaining the turbines that they already sold. And so this margin was a bit low last quarter compared to average, so I also increased that margin as well.
The stock right now, I believe today, is hovering around 82 cents. You have a price target on the stock of $2, and you've rated it a buy. What catalysts need to be put in place for Capstone to reach this target?
Yeah, so they already checked one box by securing 3-year financing, $30 million to fund, I think, their rental program, to build more turbines for the rental program. But going forward, what I need to see on Capstone, and I expect to see, is them marching towards profitability. I actually forecast positive EBITDA in 2021 for the company. So this coming quarter, when they release tonight, could be a good first indication that they're progressing towards achieving profitability for the business.
Well, we will follow the report after the closing bell today. Thank you so much for your time today.
Okay, thank you as well. Thank you.